Hi, my name is Dungho. You can call me Sunny. I just refreshed myself a little bit. Now I come to the market, just read some prior action uh, and see whether I can learn from GU. Anything today? Actually, I had learned one lesson from GU today. Hopefully, this will be a good lesson and I can apply it the next day. Um, let's see how we start. But I think on the lesson, not on some of the lesson I learned from the usual GU is really good for me. So I will tell you a few really good setup by on the lesson we learned already. Let's see. Here you can see the price sideways, but in a sideways, suddenly when the price come back here, like when in a sideways we go, the price will move from high to low, from high to low. But here you can see even the price go down slowly, but actually it had to on the sell he had to put the price go down further really fast. But here the price to me is still sideways and the price keep on this area. So this show up that the bullish imbalance because on of this arrow is empty, and the how I say the way the downtrend uptrend I go up is quite strong. You see one big, two, three, four big green candle and just one red candle M15 here. Sell it nothing, the buy really strong. So in this case, I will vote for buy. How I buy? I will wait for the price to fade break out on this area and then break back in, or have a do short failure. So for example here, like yesterday I told you, we had to wait for the price break out like this and then make the higher high at least here. You see the price come back, but it made this, so many people sell short again, and then I come back again, it made the second shot, but after this it have this candle. So for me I can buy on this candle, and then I believe the price will, how I say, break this key level, but you never know, so you can have the chance to break even or take some profit when the price go up here. So a really good setup. You can learn the price go up really in the sideways. Suddenly the price go up really strong. Just one candle and 15 candle around here, and then you trick it at a smaller sideways in a bigger sideways, and with the bullish imbalance in. Then you vote for buy, and after that the price come back here with two of this bottom. You can make a the channel, it fit quite properly here. So of course, when after the price break the channel, you start to wait. Here you can see the price constantly to go up. You will not go buy high. You wait for the retracement and then buy. Here you see the price sideways a little bit. Suddenly it's sideways. Push it down. After the push down, we have to draw the downtrend and wait for it to play out, and it come back to right on the uptrend key level. You see it here, the price break downtrend and then retest the extreme, and also you see it met the higher high here as well. The downtrend play out, the high created, then you when it come back and retest, you can buy the buy stop around here. Normally if it before, I will wait for this candle. I will wait for the big momentum candle. This one, close above EMA and then buy it. But if you buy here, there are many unadvantage because it have a key level here. It's easy to put you down, but if you buy around here, you have enough time to run. So that's why I try to enter into the area I think is safe for me, but it's not too risky. But of course it reduce the risk. Some people they think it more risky, but it really reduce the risk. Even it below EMA, because I really flexible to the market. I trade with the EMA or with the trend line, with the key level at long head, I think this is the good area. Advanced trader or professional trader, they will take this. Moderate trader will take this, but they have to be careful with right on this key level. And then take profit maybe around the top here, because the price come back here. Then you can take it out, partial out, break even, whatever, but it works. But all of that is not the lesson I want to discuss with you today. The next move will be the next lesson. This move. This move, do you see what is really different between this move up? I show you. This put and this put. Do you know what is different? The first, this one you can see when the buy go up, the short down, buy go up, short down. This is the common, really common and healthy uptrend, because when they go up a little, I think some people they take the profit and then they they move a little bit the short, it is 45 degree, constantly change and have some small retraction, so the price may go up, constantly to go up. But whenever you see the price 100% just by 1, 2, 3, 4, 5 candle just go up, and then it around, like 90 degree, it's just straight up like this. Most likely it is the last put of the day, so I can name it, it is the last fighting 90 degree. So anytime you see this last fighting 90 degree, you think the uptrend maybe it finished already. If it blood with overshoot, it really good sign. So you try to find the play to short. So for me, if it you can wait for the price create the lower low, or higher low. Like this is good signal, or you have to wait for the price sideways, fade break out a little bit, break back in at the time you short. So let me tell you again about the last fighting 90 degree. Really common, you can check it, and it will happen again in the future. I will tell you about the signal. So last fighting 90 degree is where the price suddenly come really strong momentum, 1, 2, 3, 4, all of the green candle only after the uptrend move forward. After it moved forward, fighting like crazy, and suddenly, in the last moment, on the price it really go up, and then you had to find the place to short, where you short, uh, and how to short. That is important, because maybe you short and then you die. You have to say for yourself, you only short when you see the price make the higher low. Like for example, this one higher and it is higher low, you can short from here, and you have to calculate why you have to take profit out, or should not just like leave the trade like that. Or the second one is you have to wait for the price sideways for a while, fighting a little bit here and there, and then they have a fake breakout of call on the this side, and then it come back straight. So that is the way for you to have a good shot. And take profit. Normally you can choose the break the down the trend line, because after overshoot, most likely 99 or 100% the price will break the trend line. So you choose the stop loss around here is safe for you. So based on previous two trade I told you, the first trade I get into this, and then by accident I take on the profit out right this. If I didn't take on the profit out on this key, on this trend, I can let it run, but I had to break even. I don't want to wait, how I say, lay the money, or put the money in the market. I don't want to risk anything. I just want to play for free, because it is a safe side. Then that's why I enter in this second one, take something out, but the price come back and kill me. But look at this, the price create higher, low, and then push it down. When it push it down here, and then to me, this area is just a sideway, you know, down, white, green, white ring. When it come up with white ring constantly, it just sideways and the price put up a little bit, but it put back straight away. Fake breakout right here. You can short here if you want. Short. Put the stop loss above here, and then take profit about the key trend lines. Did it? You can be a first third short if you want. So you can see the price action is really big. And the price step down. You see, it step down constantly. The seller really strong. So now it broken break key level this one, and then it's sideways again, and then it constantly to go down. It look really good. Is that right? If you can shop from here, and if you can keep just 1 or 2% of this, when it go down here, my goodness, I feel really pissed up with myself when suddenly it around 7 here. Okay, good. And also, when it break the uptrend, it normally it retest with the normally it can retest the extreme, but sometimes because the overshoot is too strong, it didn't retest up here on, it just constantly to go down. So hopefully you learn something today, and see you tomorrow morning with go analyzation. At least I learned something about lat fighting 90 degree overshoot. I learned about how the price step down, create the higher low, and how a sideways create the fake breakout. And they may not really touch an extreme after the overshoot. Okay, so I hope all of you will have a nice day today. Let me know how you feel. See you tomorrow morning. Bye.